This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Coveil. Not filtered, raw, honest. That's my passion. Today on the show, I have Peter Schiff. Peter's a businessman. He's an investment broker, author, commentator. He's been everywhere in the last 5 or 6 years. He also ran for United States Senate in Connecticut, lost a few years ago. Very accomplished, whether you like him or whether you hate him. This is a quick conversation we had that gets right to what interested me about a perspective that Peter has put out about QE policy, about Federal Reserve QE policy. Once again, you don't have to like Peter. You could love Peter. But the topic of conversation that he's putting out, discussing Federal Reserve actions in supposedly a free market, is something that regardless of the political spectrum, regardless of the side that you are on, you have to acknowledge this is a discussion that has to be had. And if it's not had, eventually, kicking the can, it'll stop. And the markets will dictate. I hope you enjoy. I had something really tight that I wanted to talk to you about anyways. So I saw your newest book, your new edition, but the thing that I really want to jump in on is QE, and not just the same old, but why you were one of the people to come out here in the summer and say, hey, folks, this isn't going to end.
Well, I've been saying that for a while. I said it from when they started it. When they first started it, when they did QE1, I said it wasn't going to end because that's the problem with QE. It makes whatever problem you're trying to solve worse. So it means that you're going to have to keep doing it. And the more you do QE, the more addicted the economy becomes to it, and the more it needs it.
What does this say about the political system, though, Peter?
So, well, we should start recording it so we're not wasting our.
Oh, I'm recording. No, seriously, what does it say about the political system that if this QE is the energy that gooses the markets, what does it say about our system today?
Well, our system is doomed to collapse. I mean, it's a fraud. We have a phony recovery. It's built on this foundation of cheap money, 0% interest rates, debt monetization, otherwise known as QE. But it's going to end badly, right? Because the longer the Fed does the QE, it doesn't solve our problems. It allows all of our problems to get worse. We postpone solving our problems, but in the process we exacerbate them. And unfortunately, the economy needs QE now more than ever before, at least the phony economy, because the more debt you have, the more important it is that interest rates stay low. And the bigger the bubble gets, the more air it needs to survive. So contrary to tapering or an exit strategy, the Fed can't do any of that. The Fed has to keep going deeper in. The Fed has to do more QE, which is what I believe it's going to do, which is why when they first announced QE, I knew that they were going to do QE too. And I was saying they'd have more QE than Rocky movies. I mean, I knew it would be an endless chain because it's like trying to put out fire with gasoline. I know it's not going to put it out. I know if you pour gasoline on a fire, the fire gets bigger. So the Fed set the fire, and then it poured gasoline on it in the form of QE. But people are mistaking the bubble for a viable economy, the same way they did that during the period of the original housing bubble. From 2002 to 2007, 2008, you had all sorts of economic cheerleaders that were talking about how great the economy was. They were praising Alan Greenspan for what a masterful job he had done. The same people who are now praising Ben Bernanke, who are talking about how great the economy is. The U.S. economy is in worse shape than it's ever been in, and we're on the cusp of a much greater economic crisis than we had in 2008. In fact, the damage that Ben Bernanke has done to the economy is much greater than the damage that Alan Greenspan did. And so the crisis that Janet Yellen is going to inherit from Bernanke is going to be much worse than the crisis that Bernanke inherited from Greenspan.
Peter, don't you think, though, that the folks sitting down in D.C., and I'm about 15 miles outside D.C. right now, don't you think they know everything that you're saying? They know this all. You don't think so?
Some of them might, but they keep it quiet. But I think most people are clueless.
Is it the nefarious part that they probably know and they just are doing it for other reasons to benefit certain people, et cetera, et cetera?
Well, a lot of it is all about expediency. It's politics. It's, look, you don't want to take away the punch bowl. You don't want to end the party prematurely. And everybody has a lot of fun with all this cheap money. Although the problem is fewer and fewer people are getting invited to the party. During the last bubble, a lot of middle-class Americans were at the party because their house was going up in value and they were extracting the equity and they were spending it. And so it was a bigger party. The party that Ben Bernanke is throwing is more exclusive, right? It's just the 1% that are at this party. So politically, it's not going to be as popular. In fact, a lot of people are suffering now because while quantitative easing is making stock prices go up, it's also making food prices go up. It's making energy prices go up. And it's preventing the economy from restructuring in a way that would provide quality jobs. And yes, real estate prices are going up, but a lot of Americans who owned homes during the last real estate bubble are renters now. They lost their house to foreclosure, and they're paying rising rents. They're not getting the home equity, and it's not as easy to borrow against your house as it was in the past. It's much easier to borrow against your stock portfolio, but a lot of Americans don't have stock portfolios.
I was going to say, though, isn't the stock market the insidious part here? Because the Fed's actions help to increase these bubbles. And I just imagine that Joe Q. Public sits around at their house, is nervous, is scared, but they see the stocks going up. They see their mutual fund accounts perhaps going up. So they just say, you know what, I'm not going to say anything. Let's just stay the course. However, if the stock market was at 10,000 or 8,000 today, I think there'd be blood in the streets. I think people would be rioting. But I think that stock market keeps people kind of satiated.
Well, people can hide behind the numbers, and, President Obama, now that the stock market is going up, he likes to point to the stock market as somehow it validates the efficacy of his economic policies. But look, the stock market was going up, from the whole time that we were inflating the housing bubble.
Yep.
And it didn't mean that we had a good economy. And the stock market is not going up because we have a good economy. It's going up because of bad monetary policy. The same bad monetary policy that made it go up before. That means when the bad monetary policy goes away, the stock market's going to collapse, which is one of the reasons why I think the bad monetary policy isn't going away. And so it's going to continue to do damage to the economy because the Fed is afraid of taking away the supports and letting everything implode, even though that would be better than what's ultimately going to happen because they continue QE too long and we die of a monetary overdose.
What's interesting, too, is I think a lot of people, well, a certain part of the population would hear Peter Schiff say that, and they would immediately pigeonhole you into a certain political place. And what I just heard you say doesn't seem to have a political foundation at all. It seems to be just an observation of what's going on.
Well, I have a political philosophy that believes in limited government and sound money, and we have the opposite of that. We have unsound money, and we have enormous government. And so what I want politically is to dramatically shrink the size of government and the role that the government plays in micromanaging and manipulating our economy, particularly when it comes to money and interest rates, which is what the Federal Reserve is doing. It's centrally planning the monetary system, and it's a disaster.
Why do you think so few people, relatively speaking, are concerned? Very few people seem to be concerned about the topics that you're talking about.
Because there's no vested interest for them to be concerned. It's much more fun and more lucrative to go along with it. Look, how many people were concerned about the housing bubble while it was inflating? Not that many. Everybody was cheering it on. When people like me talked about it, we got laughed at. So, but not that many people. You had so many people that had a vested interest in that bubble, and in not recognizing it as a bubble. Certainly the politicians. Nobody in government wants to acknowledge how bad these problems are, because what are the solutions to our problems? The solutions are that we work harder, We spend less, we borrow less, we save more, we have to cut back on government promises. People that were promised something for nothing have to be told they can't have that something for nothing, whether it's a pension to a government worker or a Social Security benefit to a voter. All sorts of commitments that have been made are going to have to be reneged on. Nobody wants to do that. Nobody wants to be the bearer of all that bad news. So let's delay it. Let's see if we can postpone the inevitable, even if the actions that we take to postpone it just make sure it's that much worse.
And it's very difficult to predict the day of reckoning because you just start to wonder how long can the can be kicked down the road?
Well, that's the problem, because you can't predict it precisely, but you do know that it's coming. And,
right.
And the people who can see it coming, and I'm not the only one, I mean, I'm just in a minority, but the people that can see it coming see it early. And that sometimes is a problem because we see it way too early, we warn about it too early, and then because the consequences aren't immediate, we're discredited. Oh, you see, you've been saying this for years and nothing's happened, right? You're a stop clock, you're a gloom and doomer, you're a perma-bear, right? So by pointing it out early, you get discredited because there's no way to know exactly. And meanwhile, if you can't warn about something early, your warnings are no good. I mean, let's say I had not warned about the housing bubble years in advance. What if I came out the day before Lehman collapsed and warned about something? What good is that? You got to warn about it in advance. But the problem is when it doesn't happen right away, they use that as evidence that you're wrong. And then when it finally does happen, they just say, well, it was lucky.
What's the way out of this? Is it really going to be a political solution, or is it going to be the great reset that the markets force upon the American public?
Unfortunately, it's going to be the latter. It's going to be the markets imposing the discipline that politicians lack the integrity to impose on themselves. They will always look for an easy way out. Right? And so the Fed, unfortunately, supplies them the easy way out. We can run these huge deficits. We can keep administering the stimulus and keep on bailing everybody out until it implodes. And the crisis is going to be brought about us externally, just like it happened. Look at Greece. The Greeks would have been happy to keep borrowing and spending money. The problem was nobody would lend them anymore, right? So it happens from external forces, and that's what's going to happen. Now, right now, we have a lot of help because we borrow in dollars, and the dollar is the reserve currency, and nobody is worried about our ability to repay because we can print. But pretty soon, people are going to be worried about that. They're going to be worried about the fact that we can't repay, and so we will print. And when we print, the money that we repay with won't have much value. And so there's going to be a currency crisis that's going to come. You're going to see a plunge in the value of the dollar relative to other currencies, in particular relative to gold. So you see a big rise in the price of gold. And that is what is going to prick the bubble, because ultimately the Fed is going to have to defend the dollar. The Fed is not going to be able to let the dollar become monopoly money. So at some point, the Fed is going to have to dramatically tighten up on monetary policy. It's going to start selling treasuries and selling mortgages and jacking up interest rates. Even if we're in a recession, even if unemployment is getting worse, they are going to be forced to do that when they can no longer postpone it. But by the time that happens, it's going to be horrific. And then the economic crisis, the financial crisis that will ensue, will make 2008 look like a Sunday school picnic. And if the Fed doesn't do that, if instead it lets the dollar become monopoly money, right? If we have hyperinflation, then you're talking off the charts. Economic catastrophe. I mean, much worse.
I have one last question because I know you got to run. So kind of shifting gears, but in the same space, for those folks that maybe listen, they're like, they're still saying Peter, doom and gloom or whatever, da-da-da-da. Explain to those people the idea that they no longer get interest income and why.
Well, you don't get interest income because the debtors can't afford to pay it. I mean, the problem is we have so much debt in America that the highest interest rate we can really afford is zero, right? I mean, the Fed's got interest rates at zero. What would happen if interest rates went back to where they historically have been? I mean, what if interest rates were 5 or 6%?
Do you expect rates to go negative eventually?
They're already negative. I mean, they're negative. I mean, they're never going to go negative in that, you take your money to a bank and they tell you that if you deposit $100, you're only going to get $99 back next year.
Is that a possibility, though?
Well, no, because then you wouldn't put the money in the bank. I mean, unless you're just talking about fees. I mean, you already have negative interest rates. If you set up a savings account, right, that has no interest, but you have to pay an annual fee to have your account, that's kind of like a negative rate. But the real way that we get negative rates is inflation eats away the value of our savings at a faster rate than the savings earn interest. So if you buy a CD, a 5-year CD, and maybe you get 1% right now, if inflation is 3%, well, you're losing 2% a year. Right, so the way we get negative interest rates is through inflation, and inflation is going to be a lot worse. It already is a problem that the government denies. We hide behind these doctored up statistics, but inflation is a real problem, and it's going to get much worse. So the negative rate of interest is going to get bigger. And that's another reason not to have your money in bonds or in cash, another reason to buy gold, because negative interest rates is really theft. The government is stealing your principal through inflation.
Peter, I know you got to run. For the audience out there, How an Economy Grows and Why It Crashes by Peter and Andrew Schiff gets into a lot more detail of what we're talking about today. I appreciate your time, Peter.
Oh, sure. Thanks for having me on. Again, I do my own radio show. If people want to check it out and get a little dose of Peter Schiff every day, go to schiffradio.com. I do the show Mondays through Fridays. The live show is 10 a.m. to noon Eastern Time. And if you can't listen live, we repeat the show all day long on schiffradio.com, so you can listen whenever you want.
Peter, awesome. Hopefully we can talk again in the future when you have more time.
Anytime. Well, you can always call my cell phone. I'm going to be in my car for an hour and a half, so you can always call me back.
Thanks, Peter.
Bye.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash, or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.